After reviewing hundreds of sets of books from other accountants and helping business owners clean them up, I can tell you exactly what separates a good accountant from one that is quietly costing you money. Most people judge their accountant by how fast they reply to emails, how friendly they are, or whether they saved some money on taxes last year. And those things do matter, but they are not the real measure. The real measure is this: when someone actually looks at your numbers, can they be defended? I started my career in corporate finance, and in that world, every number had to tie to something real. It just balances was not an explanation, it was a problem. So when I started working with business owners and kept seeing the same patterns, unexplained entries, vague adjustments, tax returns the owner couldn't explain, I understood why so many people feel uneasy about their own numbers. If any of that sounds familiar, here are 6 signs your accountant is not meeting the standard and what you should expect instead. Sign 1: they cannot explain what they did. You ask a simple question about your taxes. Why did I owe so much this year? What is this deduction for? And the answer you get is either vague, full of jargon, or leaves you more confused than when you asked. That is not just frustrating, it is risky. If your accountant cannot explain a decision in plain English to you, the person paying them, how are they going to explain it to the IRS or to a lender reviewing your financials for a loan? And here is what most people often forget: you sign the return. When something goes wrong, my accountant handled it does not protect you. I work with a business owner who had taken a large consulting expense deduction for 2 years in a row. When I asked what it was for, they genuinely didn't know. It had just always been there. When we dug in, it turned out to be personal coaching that didn't qualify as a business deduction. But if that had been questioned, there was no defense. You don't need to be a CPA, but you should be able to understand every major number you're signing your name to. Sign 2: you're always the one initiating. Think about your last few interactions with your accountant. Who reached out first? If you're the one asking about deadlines, estimated payments, or learning about opportunities after they have already passed, that tells you something. That is a reactive accountant, someone who responds to problems instead of preventing them. You can't be expected to know that an S Corp election is due by March 15th or that a retirement strategy needs to be set up before year end. That is their job. I once met a client in November who asked, "Is there anything I can still do to reduce taxes this year?" Their accountant had not mentioned retirement options, depreciation timing, or entity strategy all year. By the time we talked, most of those opportunities were gone, not because they didn't qualify, because no one raised them in time. A good accountant checks in proactively, at least quarterly, and says, based on what I'm seeing, we should talk about this. Sign 3: they never ask you questions. Some business owners think this is a good thing. My accountant does not bother me. They just handle it. But think about what that really means. How do they know whether that large deposit was income or a loan? How do they know if an expense was business or personal? How do they know what has changed in your business since last year? The answer is they don't. They are guessing. I review books where a 6-figure capital contribution was booked as revenue, not because the accountant was careless, but because they never asked. When that was questioned by a lender, the financial had to be rebuilt from scratch. Good accounting is contextual. A good accountant asks questions because context is what makes numbers defensible. Sign 4: there are magic adjustments. Magic adjustments you don't understand. This one's technical, but important. If you look at your general ledger and see end of month or year end adjustments you don't recognize, entries that exist purely to make things balance, that is a red flag. In corporate finance, we call those plugs, and they were a big deal. I have opened books and found miscellaneous or suspense accounts with large balances and no explanation. When I asked for support, the answer was, that is just how we've always done it. Every journal entry should have a reason. Every adjustment should have documentation. In an audit, unexplained entries are the first thing reviewers focus on. You should be able to understand any line in your books or have it explained clearly in under a minute. Sign 5. Your books show profit, but you have no cash. This is one of the most common things I hear. My P&L says I made $100,000, but my bank account doesn't feel like it. Where did the money go? Sometimes there are legitimate reasons: equipment purchases, loan payments, receivables you haven't collected yet. But you should understand those reasons. I work with a client whose profit looked strong, but cash was tight. The issue wasn't fraud or mistakes, it was large loan principal payments and inventory buildup. Once we walked through the cash flow, everything made sense. But until then, they were making decisions based on numbers they didn't fully understand. If you don't understand the difference between profit and cash, you cannot manage your business confidently, and lenders will notice that immediately. Sign 6. You sign returns you don't understand. Every year, your accountant sends you a tax return, 30 pages, maybe 100. You scroll to the signature page and send it back. But do you actually understand the story it's telling? You don't need to know every line. You should know the big picture. How much revenue did you report? How much tax did you pay? What were the major deductions? Were any aggressive positions taken? I have met owners who couldn't explain why their reasonable compensation was set where it was, or why certain losses were reported. One S Corp owner was paying themselves $40,000 on $300,000 of profit because that's what their accountant said. That is not strategy. That's an audit risk. Before you sign anything, your accountant should walk you through it. You should feel informed, not uneasy. All 6 signs come down to one question. If someone looked at your books tomorrow, could your accountant defend every decision? Being nice doesn't make books defensible. Saving taxes doesn't matter if the position can't hold up. And a good accountant doesn't wait for you to know what to ask. If any of this feels familiar, I offer free 15-minute calls. No pressure. I'll just look at your situation and tell you what I see. I'll see you in the next video.